SoFi Technologies. SoFi Technologies is a $6.39 stock here today, and I do view this stock as a buy right now, okay? So when it comes to SoFi, you might have heard of it before. It's an online bank. It's really, kind of what you would think about when you would think about a new age financial institution. It's really phone-centric, right? It's mobile first, like the devices people are actually using nowadays, right? And you might have heard of it from sports because they integrate very well with sports. They have a massive stadium rights in terms of a massive contract with the big stadium that's in Los Angeles. You see they have partnerships with the NBA, the official bank of the NBA. So when it comes to SoFi, they really do a great job of branding when it comes to that. And then they're going to get you in the ecosystem somehow. So it could be through a personal loan, which basically what they'll do is many times they'll offer you a more competitive rate than whatever you're paying on. So let's say you got credit card debt and you're paying, 27% interest rate, which is not crazy at all when it comes to credit card debt. That's actually very customary, right? It's crazy to have to pay that sort of rate, but that's very usual rate when it comes to credit cards. So let's say you're paying 27% and you got, $10,000 in credit card debt, right? Some people might say, I can get a personal loan, and let's say it's at a 10% APY. Well, then they'll go ahead and go and take out a personal loan through SoFi. And then SoFi can get you through the ecosystem through their banking products, their savings products, right? And then student loan refinancing, investing through it, credit cards, mortgage loans, insurance. Once they get you in the ecosystem, they got plenty of products to sell you, right? And you can just see right off the front page of SoFi, they're so mobile centric. And when you think about like a new age bank versus a traditional bank, right? Traditional banks were all about the branches, the locations, right? On every corner of America, Bank of America and Wells Fargo and Chase and all the other guys, right? That's what you think about when you think about traditional banks. SoFi's, they brand themselves very heavy in mobile first. We are mobile first, right? Now, this gets very important because you got to understand SoFi's customer base and how this base is going to build over time and how this impacts the amount of assets for SoFi. Very important you understand this, okay? So let me break it down like this. You have the different generations over time, right? They call them the builders generation. Then you have the baby boomers. You have Gen X. Now, in terms of SoFi could potentially attract some of these folks here at the top, but they're not so likely. These old school traditional banks, the Bank of America's, Wells Fargo, Chase, a lot of those guys, they have these folks kind of on lockdown already. And so a lot of these sorts of folks in these generations are likely not coming to SoFi. And that's not a bad thing. That is perfectly a fine thing, okay? Because what SoFi is doing is they're really attracting a lot of these folks. Let's call it the younger millennial generation, as well as Gen Z, and I'm sure they're going to do a phenomenal job of Gen Alpha. And when it comes to these folks, they might have smaller net worths right now, right? But remember, let's say they're attracting a 22-year-old. Well, a 22-year-old doesn't have all the money this baby boomer has, right? But you know what a 22-year-old has? They have a lot of time on their hands. And that 22-year-old is eventually going to get their first good job, right? And then they're going to eventually need their first car loan and their first mortgage and sign up for credit cards and all these sorts of products. And so that 22-year-old becomes insanely valuable as the years tick on, and then their net worth goes up and they invest through SoFi, maybe, things like that, right? And so suddenly that customer that was a 22-year-old that maybe had a $3,000 net worth when they first attracted that 22-year-old, right? As the decades take on and the years take on, SoFi gets to grow along with that customer, right? And you could think about your own self whenever you sign up for whatever bank you bank with, right? Whether it's, Wells Fargo, Bank of America, or some regional bank, or Chase, or whoever it is, I would bet you had a much smaller net worth when you first signed up for their bank. I remember when I first signed up for my first bank account, right? It was because I wanted to get direct deposit from Einstein Bagels, where I was working as somebody cleaning dishes and taking orders at that time, making, I don't know what they started me at, $7.50 an hour or whatever, right? And so for Chase at that time, I wasn't a very valuable customer. Actually, they lost money at that particular time because they gave me a $250 bonus for basically setting up direct deposit. But then as my net worth grew over time, obviously Chase benefited massively. So this is very important. You understand this about SoFi's customer base. They're attracting a lot of younger folks, a lot of people in their 20s and 30s, right? But those 20 and 30-year-olds over time will become a lot more valuable, right? And once again, they're going to snag a few of these people here and there, but this is where they're really going after. And then Gen Alpha, when those folks need bank accounts in the coming years, I think SoFi's set up very, very well to attract a lot of those folks versus a lot of these traditional Bank of America, Wells Fargo types. Because remember, Gen Alpha, who's their parents, right? Well, Gen Alpha, the millennials are their parents. And millennials, definitely mobiles first, internet first, a bunch of folks. And so they're going to be much more open to SoFi than, let's say, previous generations, right? So very important to understand those dynamics, because you've got to understand that to really understand SoFi on a deeper level, in my personal opinion, right? Now, in terms of members, which I just call them customers, SoFi calls them members, it's going up substantially. We all know that, right? I mean, SoFi just continues to attract more and more and more members to their service, and I don't really see that stopping. They just have such a great ecosystem of products that I see that member, I mean, there's going to be a day when SoFi has 25 million, 30 million, 50 million members. That's my personal opinion. That's where they're going long term, right? Now, in terms of their tech side, Galileo, this is also a phenomenal growth opportunity for SoFi as well. And you look at Galileo accounts this latest quarter, they're at 151 million Galileo accounts. So that business has got the growth going, got the mojo back going again. It had this kind of big drop off here, and people freaked out at that particular time. And things are going back in the right direction when it comes to Galileo accounts. Now, look at this. Check this out. Interest income, net interest income for the company. If you go back to 2021, 252 million, then 584 million, then 1.2 billion, then in the trailing 12 month, 1.4 billion, right? Look at total revenues, $977 million to $1.5 billion, to $2 billion, to trailing 12 month, $2.2 billion. So the growth for SoFi has been phenomenal, absolutely phenomenal. They're attracting more and more customers. They're being able to get more and more folks in the ecosystem, sell multiple products, and at the end of the day, their net interest income is becoming more and more impressive, right? Now, additionally, things have really started to come together on the bottom line. So what we're looking at here is net income or net loss, right? And you can see in 2021, they lost almost $500 million. Whew. Then they lost $320 million. Then they lost $300 million. Now on a trailing 12-month basis, they lost $178 million. But here's where it gets really good. If you look on a quarterly basis, look at how they brought these losses down, and now they flipped to profitability. If you look at the latest 2 quarters, they're now operating income positive. $51 million in the December quarter, and this latest quarter, $94 million in the plus when it comes to operating income. What a change versus a company that was losing, $50 million operating loss to now be bringing in nearly $100 million operating income. Big switch up in the business model, right, in the financials, and that changes everything forever for SoFi. If you look at net income for this company, it was negative every single quarter. They would lose tens of millions of dollars, right? And no longer. Look at the latest quarter, $88 million of positive net income. The previous quarter, $47 million of positive net income. So SoFi has completely changed their financials now at this point in time, and it's important we all understand that. And keep in mind, this is in a time period when certainly we've seen credit losses go up for a ton of companies, right? And inflation's really hit the consumer for the past 3 years. And despite all that, SoFi's still putting up, if anything, they're improving their numbers as time goes on, which is very, very impressive, right? And don't think SoFi is just giving loans to anybody, and don't think SoFi is just, has like a poor credit base or something like that because they're a lot of their folks are younger. No, when you look into like the credit scores of their average loan, it's very, very impressive for SoFi. Now, here's the deal. Forward P looks insanely high for SoFi, right? If we look at 1000xstocks.com, showing a forward P of roughly 80, right? And those are obviously based on analyst estimates. But here's the deal. Look at the 2-year forward P. It's like 20. The company's at infant stage of profitability, and so as long as we don't have some, incredible recession or something like that, which, you could say for all companies, but certainly banks, it always hits them very hard. The company's profitability is about to go up immensely, right? And so it's all of a sudden going to go from, wow, it looked really expensive to it looks really cheap. And who else has these sorts of growth rates really in the banking category in the US? You can't really find it overall. So where do I think the stock's a buy in those sorts of things? Well, and where do I think the stock's maybe going longer term? Well, here's the deal. $5 to $7 range, I would rate SoFi as a strong buy. Like that's just really like, like I'm looking at SoFi today and all I can think about is I need to buy more SoFi shares, okay? $5 to $7 strong buy in my opinion. $8 to $10 is still a buy, right? It's not quite as exciting, but it's still a good buy for the long term, right? 5 to 7 is that like, whew, you gotta be flipping my flapjacks, right? $11 to $12, I still view the stock as a small buy. If it goes over 13 plus, then it's a hold for me at that particular time, right? But in my opinion, kind of, if I look at SoFi and kind of thinking about where this company goes over the next 10, 15 years, which I'm trying to always think longer term, right? I think they have a potential to be a big dog bank, right? When we talk big dog bank, we're talking $100 billion plus market caps, and there's a lot of them. I mean, you think it's only Wells Fargo or Bank of America and Chase? No. If you pull up a list of the biggest market cap banks in the world, it's such a long list, it's ridiculous, right? And so when it comes to a company like SoFi, for instance, I'm looking at this company and say they have really set themselves up very well to become an actual giant in the banking system, right? And to become really the bank of, the newer generations. And as those folks have their net worths climb over the next 10, 15, 20 years, it should be absolutely phenomenal. And one last thing I want to add here in regards to SoFi, Anthony Noto, the CEO of the company, right? I've been very impressed with how he's leading this company and keeping them in a good place and obviously building on the financials. But the second thing I've been really impressed with is he is not afraid to buy shares of this stock. And I appreciate that, right? There's a lot of reasons why a CEO would go to sell shares. A lot of reasons. People think, they think the stock's going down. No, it doesn't work like that. There's a multitude of reasons why a CEO would sell shares of a stock. But there's only one reason why a CEO buys shares of a stock. They think it's going higher, right? That's the only reason. There's no other reason to buy shares in a stock and continually add stock in the open market unless you feel like the stock's very undervalued and you think it has, an incredible opportunity over the coming years. And so when you look at Anthony Soto, man puts his money where his mouth is, right? Pretty darn impressive. So that's SoFi. It's the first one of these three stocks that I definitely view as a buy, and it's a pretty exciting opportunity, right? Hey, I want to thank you for watching this video here today on the Clips channel. I want to introduce you to 1000xstocks.com. This is the most valuable service you're going to find out there. If you're an investor in the market, this is a tool that's going to help you immensely get to the next level in the market. So when you're looking at 1000xstocks.com, you're able to understand all the different metrics laid out exactly how you need them as a long-term investor in the market. So let's say I wanted to look at a stock like Palantir. I can go ahead and type in Palantir right here, and it's going to say all Palantir's different metrics right here. Let's say I want to go ahead and look at a stock like Tesla. I can go ahead and type in Tesla right here, search, it's going to give me all Tesla's metrics right there. Let's say I want to look at a stock like PayPal. Go ahead, search it up, and then it's going to give me all PayPal's numbers laid out right there. Compare feature is one of the most valuable features of any service literally in the world. And the reason being is you're able to compare 3 different stocks all next to each other in a matter of seconds. It's absolutely, there's no service you're going to be able to find something like this. So let's say I wanted to find out, what do I think is a better buy? Do I think it's Meta? Do I think it's Google? Or do I think it's, let's say, a stock like Microsoft, for instance, right? So I can go ahead, type all those in there, and then hit compare, and boom, in a matter of, what was that, a second or two, it gave me all the metrics out. So now I can say, okay, Meta's forward P is trading at this, Google's forward P is trading at this, Microsoft's trading at this, and I can go ahead and understand this on a very high level. Additionally, we have earnings calls on here as well. So if I need to listen to any companies I own or am researching their conference calls, I can do it right here through the service. So let's say Tesla, if I want to pull up Tesla's latest conference call, boom, I can play it. I can adjust the speed as well. So if I want to listen to it at 2x speed, I can listen to it at 2x speed, 1.5x. I also have the transcripts of the conference calls as well right here. We're also working on a lot of different new features behind the scenes. So if you would like to apply for access of 1000xstocks.com, go to 1000xstocks.com and you'll be able to fill out an application and go from there. Dumb money just went all in stock. Let's go ahead and get into this.
The largest number of investors bullish on U.S. Dumb money is all in on the stock market today, with the largest number of investors bullish on US stocks since late 2021. Just over the last 50 trading sessions, investors have been getting more and more bullish on the stock market, now reaching higher levels of complacency than December of 2021, just a couple of months before the stock market began a 25% drop. This line that you see here is a simple survey that asks investors whether they are bullish or bearish on the stock market. And since 2007, we've seen this vary up and down. But when we add the stock market on top, we see that moments when investors were very optimistic on the stock market often coincided with significant market peaks occurring before several substantial market corrections, including the 2008 financial crisis. We're going to see what...
No, the one part that's kind of flawed there, right, is that particular survey, the AAII Investor Sentiment Survey, that can stay very bullish for quite some time. It does not mean it's guaranteed to stay bullish for a long time, but I've seen that survey stay bullish for several years, really, just to be quite frank. Like, if you were to look at it as a whole, it would be in a very elevated bullish space for years, right? So he has a point in terms of, like, you know, at some point in time, if everybody seems like they're bullish, if everybody seems all in the market, right, then, I mean, who's left to be buyers out there, right? It seems like there's only downside at that particular time. I'll also push back on this narrative. Dumb money. Listen, okay? What is smart money? Okay, what is smart money? I mean, to be honest, whenever I think about dumb money, actually what comes to my mind a lot of times is a lot of Wall Streeters, just to be quite frank. These folks follow each other around. If they're all going bearish, they're all going bearish. If they're all going bullish, they all start going bullish. And they really follow each other around. So I don't like this narrative of sometimes dumb money, because sometimes people try to say dumb money like that, and they're talking about retail investors, right? Which I think is pretty disrespectful, because I know a lot of retail investors that are brilliant. Like, they're much smarter, more intelligent, make much better investment decisions than I can tell you a lot of folks on Wall Street do. And so, you know, that's just kind of where I'll push back against that, okay? And I know plenty of these folks, so let's keep getting into this.
This extreme optimism means today for investors that want to be smart money, what it means in terms of timing the stock market. And I'm also going to show you a rare signal that just occurred that's giving the US stock market today a very 1987 vibe. When so many investors are bullish on the stock market, smart money typically gets defensive and begins to scale back their exposure to stocks. And the opposite is true when many investors are getting pessimistic on the stock market, like in these instances right here. Those are the moments when smart money wants to buy stocks at a discount. We saw this in real time in 2020.
Yeah, buy low, sell
investor
high.
sentiment completely turning around from this extreme pessimism in 2022 to extreme optimism in 2024. Is it once again time to be contrarian and think about scaling back our exposure to the stock market? The way that contrarian investing works is that if most people are fearful or pessimistic on the stock market, it probably means they're willing to sell their stocks at a cheaper price than what they're worth. When most investors are very optimistic, they're probably willing to buy stocks from you at a premium. The rational contrarian investor can take advantage of both of these fearful and greedy markets. Today, with the price of the stock market at much more elevated levels and investor sentiment getting more and more optimistic, we're definitely not recommending our clients to buy stocks with both hands or the long run like we did in 2022. In fact, investors with a long-term investment horizon should probably be thinking about building cash at these levels. Now, unfortunately, contrarian investing is not the greatest way to time the market perfectly. In May of 2021, for example, investors were already extremely bullish on the stock market, but it wasn't until January of 2022 that the stock market actually peaked, so 8 months later. So a contrarian investor...
Exactly, and it took, obviously, inflation to be completely out of control, and then the Fed to obviously reverse course and then start raising rates the most rapidly they've ever raised them in history, right?
Missed out on these 8 months of gains. Now, eventually, they would have been able to buy the stock market at a much lower level than what they sold them for. So that's
exactly, this is the point I was trying to make earlier, right? Where, okay, you might see an indicator like this, very bullish. You may say, okay, you know, we're due to go down. Well, you might be waiting months. You might be waiting years for that to happen, right? So I think the interesting moment will be when the Fed actually cuts. Because that could be a moment where actually the market starts to go down. A lot of people are expecting the market to blast higher when the Fed actually cuts. don't be surprised if then we start to run into some trouble.
We're telling our clients today. Our strategy is much more of a day-by-day approach for traders and investors that want to continue riding this bull market as long as the price action and the macro environment remain bullish. Or in other words, as long as financial markets remain risk on. We just saw the S&P.
Let me push back against this also here. The big problem here, okay, is when you're starting to make your investment decisions based upon what you think is going to happen in the economy, what you think is going to happen in the stock market, you're already kind of losing, in my personal opinion. You really need to be focusing on what your companies are doing, where your company's valuations are at, right? Rather than trying to time out what you think is going to happen in the economy, how the market's going to react to what's happening in the economy and these earnings and those sorts of things, right? Just focus on a lot of your portfolio. It's fun to kind of see what's going on out there and, try to predict. But when you actually go to make your investment decisions, I think it's much easier to focus. Let's say you're focusing on Shopify. I think it's much easier to focus on where do you believe Shopify's revenue growth is going over the next 5 years, right? Why do you think it's going there? What do you think Shopify's net income is going to over the next 5 years? Where's the market cap today versus where their net income is going to be 5 years in your opinion, right? That's, what type of PE ratio do you think should be valued at in 5 years from now, right? That makes it so much more of a simple game than trying to gauge out exactly when the economy is going to get hit, exactly what the Fed's going to do, when they're going to do it, right? I mean, everybody and their grandma was predicting the Fed was going to be cutting like crazy this year, and we haven't seen one cut yet. And there's talk that maybe there won't be a cut, or if there is a cut, there's one cut coming, right? And Wall Street, once again, is Wall Street dumb money or smart money? Let me ask you. Wall Street was convinced we were seeing 4 to 6 cuts this year. Where are those 4 to 6 cuts at? We're going to be lucky if we get one cut, right? Think about that.
500 bounce off its 100-day moving average and off a key price channel that we repeated many times would provide a huge buying opportunity for investors. But it's not just the price action of the S&P 500 that's risk on today. We're also seeing signals from the rest of the market that suggest we're still in that type of environment. You may not have heard of it, but this is one of the most powerful risk on indicators for the stock market. It's the gold to silver ratio that just triggered a very rare signal. We recently saw a huge breakdown of this gold to silver ratio, which means that silver is outperforming gold substantially. Now, this breakdown tells us a lot about how precious metals investors are feeling about the market. Everyone knows that gold is a safe haven. It protects you from any sort of risk in financial markets. Silver, on the other hand, is a lot more volatile than gold. It goes up and down much more aggressively. So precious metal investors flock to gold when they're feeling less confident about financial markets, and they flock to silver when they're feeling very confident about financial markets. And so that's why this breakdown is so important, because it's telling us that precious metal investors today are confident about financial markets. Now,
I'll push back against that a little bit, right? I mean, right here, great buying opportunity, unbelievable buying opportunity in the market, right? And you could say, this gold to silver ratio was really low at that particular time, right? This is also a great buying opportunity. That was also a great buying opportunity, right? This was a great buying opportunity. So I don't know how much faith I have in that one.
I can prove my point. I've highlighted 3 moments here on this chart where the gold to silver ratio did something very similar to what's going on today. When I add the S&P 500, you can see these breakdowns in the gold to silver ratio happen to be followed by large moves up in the market. So we can say that these breakdowns are risk on signals. And we can go back further in history as well. All of the breakdowns that you see on this chart are similar to the one we have today. And all of them were followed by significant rallies over the next few months, and in some instances, years. But there is one problem that makes today different from all of these instances that you see here. Today, as I showed you at the beginning of the video, investors are optimistic on the stock market. Most of these breakdowns that have occurred on the gold to silver ratio happened when most investors were not optimistic on the stock market. In 2020, they were not optimistic with an ongoing pandemic. In 2016, they were not optimistic. In 2010 and 2003, they were definitely not optimistic like they are today. Many of these breakdowns in the gold to silver ratio occurred after significant drops on the stock market that damaged investor psychology. All of them except for one, 1987. This is a moment in history that we've compared many times to today in recent videos because of how many similarities there are. We can see this breakdown in the gold to silver ratio also occurred after the stock market had all...
Yeah, so this gold to silver ratio, the bottom line is I don't have a ton of faith in that. And if you're trying to time out the market perfectly here, no. Now, one other thing I do think is just important to kind of factor in here, you know, this particular channel has been pretty incredibly bearish for a long time, right? I mean, you know, it's pretty self-evident when you kind of go through the channel and you watch our videos. But that being said, I actually love watching, you know, a lot of bearish videos personally. If you wonder, like, what do I watch more if I'm watching YouTube related stock market stuff or market stuff? I actually watch a lot more bearish stuff than bullish stuff. And the reason I personally decide to do that, right? I mean, so yeah, obviously that channel's been pretty bearish for a while. The reason I love to watch a lot of bearish stuff is I'm going to usually lean optimistic. I'm going to usually lean bullish, right? And so I love to just hear why it's all bad, right? Like, and sometimes there's some good data in some of these videos, right? Sometimes it's like, oh, this is a little bit of a reach, but I love to hear actually bearish takes. I enjoy it very much, very much. I actually enjoy it more than bullish. So anyways, that's just my opinion on that.